Hey traders, welcome to Top Tier Outlook. Happy Sunday evening, everybody. We're taking a look at the open. I know a lot of folks are wondering, Rog, is this going to be just a disastrous open? I know a lot of folks are wondering, could we get some circuit breakers going off today or tomorrow? Right now, it's a gap down. Not super surprised because we did have a very weak open. There's an old saying, and for those of you that were tempted to buy on Friday, remember, don't fade Fridays. If there's going to be an opportunity for a buy that could set up into next week, it's going to be probably between the bell and about 10:30 a.m. We see if there'll be a bid. If there's not a bid, then we could just continue with the weakness that we're seeing. So yes, we do have a gap, but let's just keep in mind, so far, this gap is not exceeding any volatility ranges. Let me open up the 1 hour chart here. We're not really exceeding any volatility ranges by a lot. In fact, where we sit right now, we're kind of smack dab in the middle of that range, but the markets have been open for 3 minutes. I'm not going to make any huge decisions about what happened. Clearly, getting back to the previous session close is going to be the biggest challenge for Monday. Can we get back above 53.58 or even on the NASDAQ? The 18,513. I mean, we are trading at 18.3. So two things. First of all, to have a circuit breaker go off, to have that limit down trading halt, we've got to be down 7%. Let's go take a look at the Dow. We've got to be down 7% on the Dow or the S&P. And let's remember the last time the circuit breakers went off. They went off 4 times back in March of 2020. That was in the midst of the very earliest reaction to the shutdowns during the pandemic. So, when you think about the extreme fear that has to be in place for those kinds of things, we'll say, oh, is this really extreme fear, or is this the continuation of the tantrum that was thrown Friday? What sent us on Friday into that downward spiral? And was really Friday the first time that the warning shots were fired? So I want to talk about a couple of things in a very tactical way where we can see, look, Friday's volatility wasn't really out of the blue, not in any way. And if you watch the Friday video that I sent out, Markets Not in Turmoil, we're in a lot of chop right now. We're in a lot of violent chop. This is not a downtrend. So I think for me, what I like to do is ask myself, well, where are we? Where are we in the big scheme of things? We're off the highs, clearly. But where are we in the big scheme of things? We're still above the late June lows. We're obviously weaker than we were. But is there anything about this that's taking us lower than we've been even just 30 days ago, right? Not really. I mean, these are the lows we saw in late June, early July. In fact, we haven't even taken out the July lows in the Dow, which then also adds in another part to this conversation, which is not all 4 of the indices are in these dramatic moves to the downside. In fact, if for as much as a lot was made of the trading on Friday, Thursday wasn't very pretty. Friday wasn't very pretty either, but neither was July 24. So look at how long the volatility has been heightened. It's been heightened for a while. So what makes Friday's action any worse than the previous 1, 2, 3 really volatile big candle days? Probably the most important thing is we took out near-term support, right? We did take out near-term support. And what we did get was a minor low that formed on the 26th. So the minor low began on the 25th, fired on the 26th, and then we went up to the previous high that we saw on the 24th. So all that chop, we just went back up and met that level, and then we sunk back down. So in the most short-term way, the minor low showed a near-term floor. We bounced, and then probably the most calamitous thing about Friday was that we broke that floor, and here we are. Now, the NASDAQ and the S&P have been under a whole lot more pressure, but the Dow hasn't been as bad. And one of the things I really wanted to make sure that I do and that I communicate is that not everything is going to be heading lower. Things that are weighted in the S&P and the Dow and the NASDAQ will obviously be under a lot of pressure. So if you take a look, for example, at, let me see here, let's go to COIFIN, all right? Take a look at what happened on Friday. Weakness in the semiconductors, weakness in oil in gas explorers, weakness in oil services, weakness in consumer discretionary, regional banks. But there were three things that were outperformers. They actually kind of trended a little bit higher through the day: healthcare, utilities, and staples. 2 out of 3 of those, utilities and staples, are defensive sectors. So when certain things are going down, other things are going to go up. It could be bonds, it could be gold. But when certain things are moving, always ask yourself, am I persisting in a place where I really don't have an edge? And believe me, I think for a lot of traders, they think their edge comes the strategy or even the indicator. Your edge comes from the most basic thing that we all build, whether consciously or unconsciously. That's our watch list. The watch list is your edge. Building a watch list of relative outperformers, it could be the weakest of the week. If you said, Rog, we had so much weakness in the NASDAQ, I flipped to the short side. Great, right? That's your edge. Finding stocks that are weak and would likely persist in being weaker. On the flip side, what we're doing in the mastery, and I'm always going to talk my book, right? There's nothing really, for a trader to talk anything other than their book, there's no point, right? What are you doing, Rob? Not what you're hypothesizing. What are you doing? Well, I'll tell you the three things that we had into Friday. Long Coke, which is a heavily weighted stock in staples. Long utilities via calls. We had already been in these for a couple of days. And then healthcare. I got stopped out of healthcare on Friday. After it hit a target, came back down to break even. So there's two positions I'll have going into tomorrow that are open. Utilities and Coke, which again is, I believe it's the number 4 weighted name in the staples, the XLP. And that's it. I'm not short anything. I'm not long anything. I'm just focused on the things that are behaving in the most predictable manner, which is in a defensive way, those moving higher. So those are my only two positions going into Monday. And if you take a look at a 1 month normalized performance, what's right now. So we're looking back from Friday, 1 month. What's still above zero, right? That line is drawn at industrials. Industrials to communications, that's where we go from these major weighted sectors in the indices going from being positive to being negative. So financials, beware, because if the Dow is selling off, financials are going to go with it. This is not the time to be long financials. Basic materials, look at healthcare. Even with all the sell-off and the volatility the last few days, look at how healthcare has been, kind of flat, but slowly trekking higher. And then when you look at the flows, one of the things that I put in the top tier outlook last week was a chart of healthcare and the flows saying, look, if there's something other than the defensives that have a shot at holding their own in this weakness, in this volatility, it's probably healthcare. And there it is, right? And there's your staples. Gold miners have been still doing pretty well, and utilities. Now, why gold miners? Well, take a look at what's going on with gold. Let's go jump on over there. Okay, so GC futures. And there's gold, right? So I'm not going to call this a flight to safety. It's actually not. What this is the difference between the shorter end of the yield curve and the rate of inflation. And as long as that chasm narrows, gold's going to be supported. And so another place to look for longs would be gold, right? So there are places to buy. They're just not the places that we loved buying in Q1, which is why I say your ultimate edge is your watch list. Now, once the candles go red, the only thing you can do is short. So if you're saying, Rog, you don't talk a lot about shorts. I really don't. I'd rather be long. Will I short? Sure, but I'd rather be long. There's a lot of volatility in a downtrend that you usually don't have in an uptrend. They aren't just, turn a frown upside down kind of thing. They're not the same behavior. They're both trends, but downtrends can be more volatile. Downtrends can be faster too. So if we're not looking at the same places we looked the first half of the year, we're not looking at tech. We're not looking at NVIDIA. We're not looking at all those names that were climbing early part of the year. We're looking at things where traders like to sort of take cover. Look at staples. This is the trade we have on in Coke. Wait, something is in an uptrend moving like this? Yeah, it's Coke. So as long as you remember your watch list is your edge, if you've ever spent some time in the Sector Secrets Mastery or even Charts and Coffee, we talk a lot about alignment. Coke is weighted in staples. Staples are strong. Coke is stronger still. So these are the kinds of things that we want to focus on. Where are the trends? There's a I don't know if it's on my, I don't know if I'm logged into Twitter. or Insta. Oh, I'm not logged in. Okay. I put a tweet, and it's on my Instagram too, for those of you that might follow me there. One of the things that I posted was, who's watched that Turkish? Go check it out. It's on my Twitter feed. If you go to X/Raghee Horner or Instagram/Raghee Horner, you'll find it there. But one of the things that I posted was, who's seen that the pistol event from the guy from Turkey? I didn't see him. No ear protection, no fancy eye gear. Some of these guys look like the Terminator. They have all these different things on their eyes and all these lenses and covers. You've seen that? This guy from Turkey, nothing. He just kind of looks, holds his pistol, silver medal, right? And they have all these other people that look literally like one of the Terminators. All this gear, and just, I guess my point with that was, sometimes just look at where the trend is and buy the dip. The game has never changed. The game has never changed, right? We can add all the fanciness of algos and systems and high frequency and all this other noise. But at the end of the day, us as traders, we look at the chart, we point, we shoot. That's it. Find the trend, buy the dip. And if there's no trend currently, doesn't mean it might not be there again. Maybe it's down, right? And you can obviously take advantage of that as well. But always rebuild the watch list. That is the ultimate edge. Okay. All right. So let's grab a few questions here. I just wanted to make sure everyone sees that, not everywhere is it a disaster. And yes, we're selling off. But if you step back and look at the year, look, is this a calamity? It is only if you buy at the highs, right? It's only if you're chasing things higher. If you're buying dips, I'll give you another example. We're going to go shopping in the Sector Secrets Mastery on Tuesday for longer term positions. And that means that we look at a weekly time frame and we look at our buy and hold position portfolio. So you can have a position trade. Position trades to me have a far longer time horizon, and we set them up on a longer term time frame. So one of the ones that we set up was McDonald's. Look at McDonald's, right? It had a setup. It was a relative outperformer, had good earnings. We have McDonald's from $253.30. That was our trigger, right? So you just got to know where to look. Don't worry about looking where everyone else is looking, because if you want results different than everyone else, you're probably not going to trade in the same way, nor are you going to trade the same things as everyone else. Everyone else is wondering about when semiconductors are going to bottom out. I really don't care, right? As a trader with a time horizon of a couple days to a couple weeks, I don't care, right? I'm not talking about my longer term portfolio. And if you ever worry about your portfolio in times like this, don't look at it. Make sure you remember what your cost basis was. Don't worry about the interim volatility. Just remember that for the most part, when things settle down, like in 2020 or April of this year, what's the tendency? It's to go back up, especially when we have the wind at our backs in terms of lower rates. Rates are expected to be dropping potentially 50 basis points. I saw someone mention that in the chat, that there is a likelihood, Rog, we're going to get a half point cut. That's what's baked in. That is what's expected. 69.5%. Doesn't mean that that's what's going to happen. We're definitely going to get the quarter point cut on September 18, but there's a chance that Powell sort of acknowledges they could have acted a little bit sooner, maybe to the July 31st meeting. And they say, you know what? Yep, based on the jobs data, we're not panicking, but it does say that it will make sense tactically to give the market a 50 basis point cut, right? These things are where I'm still optimistic, right? So remember, nothing suddenly went bearish. I guess the fear is always, Rog, the dark at the top of the stairs, right? But Friday wasn't the problem. The problem was really dating back to the end of July, where the volatility started kicking up. Take a look at the S&P. This wasn't the sole volatile day. We had 3 crazy days sessions since July 24th before that. So, when the market gives you little warnings like that, the candles go red, gets volatile. This is really the culmination of what we saw July 24. Take a look at the volatility break on the 30th. The volatility was broken again on the 31st. The volatility was broken again on the 1st of August. And then we got the 2nd of August, right? Everything else is going to lag, right? I know a lot of folks were looking at the VIX on Friday. We were already in the Sector Secrets Mastery saying, The VIX is kind of getting above 15, 16, which has been that level where volatility starts to get higher. But I don't need the VIX to tell me. I don't need SPX options. You don't need SPX options to tell you that there's volatility. It's been there since the end of July. So remember, most of these things don't sneak up on us. They really don't. We just have to note what they were doing, sometimes days, in this case, well over a week, right? So all that stuff, all those market internals, ticks and trends and put call ratios and the VIX, they're all going to lag what we're seeing in real time on the charts. So if you have a way to measure volatility, you'll know, hey, Ron, yeah, you're right. It kicked up on the 24th. And if you don't have a way to measure volatility, what we use are daily price movement ranges. We use a historical volatility look at what does the market, could be Apple, could be financials, could be JP Morgan, whatever it is. What does it typically do versus what is it doing now? So for example, look at all the volatility here starting mid-July, July 18. Take a look at the volatility on the 1st. And then we got that 2nd, right? So it can be tricky, I know, unless you have some lines in the sand. So find a way to put some lines in the sand. And then you'll realize that a lot of times, when you look back at, say, financials as a group and the Dow, right? We were pretty volatile. And remember, if the Dow is heavy, the financials have got to work twice as hard to withstand that weakness. Or if the Dow is volatile, it's probably going to trickle down to those important high-weighted sectors. So I want everyone to find a way to say, Rog, let's not talk about Friday alone. How do we prepare for Friday? How do we make sure we're not in these positions? So if something like this happens, we're not caught up in it. There's no guarantee, but based on the book that I've got, you know what I'm in, right? And that's why we were in what we were in. They were not as volatile and they were actually outperforming. So I hope that makes sense. And these are repeating things. These are repeating realities. It's not a one-off thing. All right. So let's see what else. Who caught the 100-meter? I was rooting for that kid. What was his name? Noah Lyles. We watched that series on Netflix called Sprinter. Really good. And what a race. Did y'all see that 100 meters? I mean, it was just a photo finish. I think all the runners, all 8 slots were right there. Amazing run. Yeah, I've been watching some Olympics. Absolutely. Yeah. Olympic Sunday's not been in any way boring. Yeah. Okay. And how motivating, these folks are doing what? They're preparing for that one day. The preparation is really what's so inspiring. For us, we can prepare every day and we have every day to try to do it better. But imagine if someone said, you got one day a month or one day every 4 years to trade. What would you be doing in those days in between? You'd be building your watch list. You'd be preparing. You'd be getting ready. We get to do it every day. So really inspiring to watch them. Yeah, absolutely. All right. Anthony, where can you see that normalized performance chart? Koyfin, KOYFIN.com. KOYFIN.com. And these are the US sectors. Now I choose some specific ones, but you can look at a whole host of industries and sectors. As far as seasonals go, I'm not gonna in any way override the macroeconomic reality of rate cuts with seasonals, but I've been getting a lot of questions about seasonals and what typically happens this time of year. It's not an overriding thing, but yes, if you're wondering, is August to September into October pretty tricky? Yeah, there's your 5-year look back on the SPY and what August looks like. If we look back, say 15 years, same kind of thing. So yes, that transition into late August through September. But please remember, these are not setups, they're tendencies, and tendencies are not trades. So what I want to remember, though, is if the Federal Reserve starts to act in September and we get that 50 basis point cut, please, we're not going to see things like this, right? Lower rates won't be something that we continue to see sell-offs. And remember, we haven't even got the first rate cut. And if we get a 50 basis point cut, and the Federal Reserve is pretty open to continuing to cut a quarter point in November, a quarter point in December, and through spring of next year into summer, which is what is currently expected, that will be anywhere from 1.25% to 1.5% lower in the Fed funds rate by, say, April, June of next year. Tough to be a bear in that environment. So that's where we sit, gang. There's no reason to panic if you didn't check out the video from Friday, please do. Are there trends out there? Yes. Are there downtrends out there? Absolutely. Absolutely. So find the trend, preferably up, buy the dip, or find the trend if it's down and short the rip. All right, gang. As always, thank you so much for being here for Top Tier Outlook. I'll see you tomorrow for Charts and Coffee. Stay with the plan. Find those trends, gang. It doesn't, remember, be that Turkish pistol. I forgot what event that is, right? He said, I'm a natural shooter. That was his quote when they said, my gosh, the lack of accoutrement on this guy and the silver medal. That to me was a really good lesson from the Olympics. Rog, less is more sometimes, isn't it? All right. Be good to each other. I'll talk with you soon.